सभी को नमस्कार। मैं त्रिलोक सैनी आज के सभी पार्टिसिपेंट्स का तहे दिल से स्वागत करता हूं, अभिनंदन करता हूं। ट्रेनिंग फॉर प्री एग्जामिनेशन ट्रेनिंग फॉर LD A&A एग्जाम के तहत आज 38th सेशन है और आज का सेशन जो लेंगे वो है श्रीकुमारन जी, सीनियर फाइनेंस एंड अकाउंट्स ऑफिसर CMFRI कोची। उनका इंट्रोडक्शन देने की आवश्यकता नहीं क्योंकि वो ऑलरेडी पहले एक सेशन ले चुके हैं। तो ज्यादा देर ना करते हुए मैं श्रीकुमारन जी से अनुरोध करता हूं कि आगे का सेशन कंटिन्यू करें। श्रीकुमारन जी, थैंक यू सर।
Okay, sir. Thank you very much. Is it okay? Can you hear?
Yeah.
Okay. Sir, I'll just start my screen sharing because last time there was some issue. Just to begin with, okay, I'll start sharing the screen.
Yes.
Is it okay? Is it okay, sir?
Yes, sir. Yes.
Right. Is the slide moving now? Because last time there was some problem.
Yes, sir.
It is moving.
Yes, sir. Yes, sir. It is moving.
Oh, fine. Okay, sir. Thank you very much.
Welcome.
Fine. Today, we discuss cash book, its maintenance, and also the BRS. We all know that all the ICR institutes are having cash books. We have got two types of cash books. One is the main cash book, and another is a subsidiary cash book. What exactly is a cash book? Just for formality's sake, now let us define. A cash book is a register to record the receipts and payments of money that has been received or paid out. In our day-to-day activities, ICR makes payments and ICR also receives money. Making payments by way of the services, goods and services it receives, we have to make the payment. We also give training, consultancy, and other services. Naturally, we are getting receipts also, funds also. And all these transactions are being noted in a cash book. It also includes the deposits and withdrawals made by the bank. It is not just that we note the transactions we make. Sometimes the bank also gives you some money that I will be discussing later. What are the deposits the bank makes? And also it also withdraws money from the bank. These deposits and withdrawals also, we have to make note of it in our cash book. So our cash book doesn't just tell about the receipts and payments we make, but it also the transactions the bank does to our bank account. Cash transactions first get entered in the cash book and then posted to the broadsheet. So the initial level of entry when a transaction happens, it is first entered in the cash book and then it gets posted to the broadsheet. Now, as I've already mentioned, two types of cash books are there in an institute. One is the main cash book and the next is the subsidiary cash book. Main cash book is being maintained or it is the accounts officer, and the subsidiary cash book is maintained by the DDO, drawing and disbursing officer. Main cash book custodian is accounts officer and the DDO keeps track of all the cash transactions he or she does it as a DDO, and it is being entered in the subsidiary cash book. So there are two types of cash books being maintained in an institute. Subsidiary. So we will be first discussing the subsidiary cash book first. This cash book is primarily meant for keeping an account of cash handled by the DDO. We know many institutes are having this some sort of many institutes are having less amount of cash being handled, but still we cannot simply stop handling the cash. We are handling the interest actually. We do handle the interest. Many institutes have got some award also for less number of cash transactions, but still we do handle cash, and it is being dealt by the DDO. DDO deals with the interest also. Interest is actually the contingent expenses, contingent advances the institute gives for the day-to-day activities of the institute. Naturally, the DDO pays cash, and she also receives cash. But whereas in the case of an accounts officer, he doesn't or she doesn't. He doesn't accept cash, or he doesn't pay cash. Another important thing the DDO handles is the advances. At least in some of the cases, some of the institutes, advances are departmental advances are given to officers. Many cases, officers don't accept advances to their bank accounts because of so many issues, including the income tax issue. Income tax people will also know that so many money comes into the account of the officer. So that is why, at least in very rare cases, DDO is given this advance, and from the DDO's part, the advance is given to the officers. They spend it, then later on, they give you that adjustment. Then all departmental receipts in cash. So the institute also receives revenue is there actually by way of sale of farm produce, by way of sale of fish, or even some cases some guest house stay that that license fee will also be paid by the occupants or the guests by cash. This is also to be accounted by the DDO. Many institute, many cases everything is online, but we cannot forget the fact there are some interior areas where internet doesn't work, or POS will not work. In such case, they don't have any other option than to accept cash. In such situations also, DDO will be primarily responsible for its collection and also remittance to the bank. Then some cases refunds are also there. I have told that advances are being given to the scientists or officers. Suppose if somebody is given 50,000 rupees, he need not spend the entire amount. There could be some balance amount. So that also needs to be paid back to the institute. Yes, sometimes he may give you check. He can even remit by online also. But in some cases, they prefer to refund the amount by cash. When it is refunded by cash, it is to be given to the DDO. Here it is we discuss the maintenance of the cash book. So we have told that all receipts and payments, receipts are to be written on the left side and payment on the right side. Each entry, either receipt or payment, needs to be attested by the DDO with a dated signature. With the dated signature, it is important that date is must. It cannot be done on the next day. It has got some, from the vigilance angle also. It is important that each entry has to be signed and also with the dated signature. Not a single entry should go or missed without the signature of the DDO. Whenever cash is received or collected, proper receipts are to be issued to the concerned. Whenever we get the money from an outsider by way of sale of anything actually, even for training, farmers may come for training, students may come for training, or guest house occupation also. Whenever you get that cash, you have to immediately issue a receipt. Whether it is 1 rupee or 1 crore, it has got its sanctity. You invariably you have to issue the receipt, and this receipt, and whenever this receipt is issued, that has to be noted in the cash book also, along with that receipt number date, and also amount. Amount definitely has to come in the cash book on the left side. I'm talking about this receipt book. It has got its important, and this receipt book's stock register also has to be maintained, because in some cases, especially in some research centers or regional centers, they will be printing their own receipt book, which is absolutely not correct. We cannot accept it actually, because there has to be a receipt book, and it has to be issued from a central stock, or at least from the headquarters. Proper maintenance of stock register is must in order to avoid any sort of manipulation. Because if you go on printing without any stock, then duplicate receipts can be issued. For a person, that receipt is good enough. You'll be happy. But then that amount need not come to our office or in the book. Receipt books are to be serially numbered and same attested in the book itself. It is very important that the receipt book has maybe it is from 50 pages will be there, or 100 pages will be there. Whenever the cashier takes one book, then he has to physically verify that it is serially numbered from 1 to 50 or 1 to 200, and this aspect has to be written on the front side or back side or anywhere it is convenient, and that needs to be signed by the custodian of that receipt book, that in this case normally that DDO. It need not mean that the DDO always gives you the receipt or issues the receipt, but in guest house also somebody else will be doing it. If you are having a farmhouse, farm officer in charge will be doing it. In such cases, those officers will have to attest it. This is also very important. Cash received is to be deposited with the bank forthwith at the earliest, because we cannot keep all this cash with us for long. There are many instances, all these cash receipts are kept with the cashiers. It is not correct. It has to be. It is a government money. It has to be deposited with the government account immediately, and details are to be noted on the back side of the counterfoil. Suppose you are getting some 10,000 rupees by way of training. So its details, for what purpose, what is the name of the training program? Of course, name, etc. are there in the receipt book. But then further details have to be further details like entry of the subsidiary cash book, etc. needs to be written on the back side of the counterfoil. And this also needs to be given. One of the copies also needs to be given to the accounts officer. So he also may require it actually at a later. That is why it needs to be written on the counterfoil. And for internal audit purpose also, that is important. The pay-in slip duly acknowledged by the bank. The entry made on the payment side of the bank will be attested by the DDO. Here, this payment is actually by the DDO to the bank. Whatever receipts he or she gets, the DDO gets, okay, that will have to be deposited to the bank. So naturally, when it is received, it will be written on the left side, receipt side, and when it is paid to the bank, it will be written on the payment side. And when it is given to the bank, there is a counterfoil will be there, and this counterfoil will be sealed by the bank, and along with this this seal, this counterfoil has to be given to the accounts officer by way of, and it is called actually pay-in slip. So the pay-in slip form will be there, pay-in slip will be there. Along with that, this bank pay-in slip will also have to be given to the accounts officer, who will again take this into his main cash book. This is the way in which the DDO receives the cash, deposits this amount with the bank, and its details being sent to the accounts officer. Hope it is clear. Petty contingencies paid from the interest has to be entered in a separate interest register. So we discuss interest register actually. So there has to be a impressed register. In this impressed register, whenever we make the payment, petty contingent expenses, we note it here. So each time there is an expense, we will not enter the transaction in the subsidiary cash book. Instead, we will note it in the impressed register. And the total of the transactions or payments you make that day, one particular day, its total will only be entered in the subsidiary cash book. Otherwise, the subsidiary cash book will have so many transactions, and so many pages will be required for one day's transactions. In order to avoid that, a separated impressed register is being maintained. As I already told, each payment each payment will be noted in the impressed register. Its total will be noted in the payment side of the subsidiary cash book. Erase and overwriting in cash books. What we now discuss is the maintenance of the subsidiary cash book. Of course, there is a format for that. It is available in the audit manual. All the ISR institutes are following it. So what we discuss is the maintenance, how these subsidiary cash books are to be maintained properly. An erasure or overwriting of an entry once made in the cash book is to be strictly avoided, because what we are writing is the figures. We cannot overwrite it, because tomorrow somebody else also can do it. We cannot put white ink or something else so that you can overwrite it again. That can be repeated. In order to avoid that, what should be done? If a mistake is occurred or discovered, it should be corrected by drawing the pen through the incorrect entry. Just score it and inserting the correct one in red. Then you have to write the correct one in red in between the lines. So in between the two lines or top of the erased one, you have to write afresh. No overwriting, no whiting, etc. is allowed, because that can be repeated. The DDO should initial each such correction and invariably date his initials. Whenever an entry is there in the cash book, subsidiary cash book, whenever there is a correction, that needs to be attested. The correction needs to be attested by the DDO, who is the custodian of the cash book, with the date. Closing of a subsidiary cash book. The subsidiary cash book will be closed daily. Whether there is a transaction or not, it has to be closed. Because in many centers, daily transactions will not be there. So that doesn't mean that you don't have to close the cash book. It is must, because many centers or many places, many institutes now, it is very likely that though transactions occur, that these will be written on a single day in the cash book. This is not allowed, because payment will be made, you will have the bills, but in the cash book, there will be a closing balance. Okay. Only when this, payments are noted in the closing balance will come down, and that will be tallied with the cash just being maintained by the cashier. When you don't write all these payments you made, this closing balance will not come down, and there will be a difference of cash available or noted in the cash book and also available in the cash chest. That is why we insist that the cash transactions, whenever there is a cash transactions occur, the same needs to be written on the same day itself in the subsidiary cash book. Before it is signed by the DDO, he will check the totals on either side and see that all entries made therein have been duly attested by him. He has to daily close it. He also has to attest it. And while attesting it, he has to see all the receipt bills or receipt vouchers and also the payment vouchers, and see that the amounts, all the entries made therein have been duly attested by him. And then he has to close it. Closing balance will be there. Under that, the DDO has to attest it. DDO has to put his signature with date. DDO has to, this is actually physical verification of cash. DDO has, it is the one of the primary duties of the DDO. He or she has to physically verify the cash quite often. Physical verification of cash means daily you will be closing the subsidiary cash book. There is a closing balance, and this closing balance and the cash balance available in the cash chest has to be same. It has to tally. There cannot be 1 rupee less. There cannot be 1 rupee more. If there is any difference in the closing balance, then it is a very serious issue. It is a very vigilance issue. That is why DDO has to physically verify the cash every now and then. But invariably, on the last working day of the month, the DDO has to verify it. If there is any salary part, if the last working day is a holiday or something like that, if it's not possible to do it, then it should invariably be done on the next working day before start of any transaction. And to this effect, a certificate also has to be affixed. This is actually physical verification of cash book. It is the duty of the DDO to do it. Has to be done every now and then. Invariably, it should be done on the last working day, at least on the next working day of the month. The certificate to be affixed is certified that cash amounting to rupees this much has been physically verified and found correct as per the balance recorded in the cash book. So there is a cash chest, there is cash book. Cash book closing balance will be there. That much balance has to be available in the cash chest. Surprise check to be done by the other than the DDO. So it is not just the DDO who has to do this surprise check. Other officers have also to be entrusted with this work. So once in a quarter, the head of the department has to authorize any officer to do this work. He will come to the cashier, he will see the closing balance, and he will also physically check the cash available with the cash chest and certify. He also has to give the same certificate which the DDO gives. Certified that the cash noted in the cash book tallies with the cash available in the cash chest. Accounts officer also has the responsibility to do this work. As per the audit manual, it is to be done once in a month. Many accounts officers do it, but many, since they don't get time, they don't do it. But then they will definitely see that at least once in a quarter they do it. Certification with a dated signature. Everywhere, when you do it, it should be done with a dated signature. So it is not only DDO's physical verification. It has to be done by an officer. It has to be done by accounts officer also. Cash chest. Cash is to be kept in a strong iron safe with 2 locks. There has to be 2 locks for that actually. It has to be a safe iron. In older times, we have seen, this safe is, fixed with some walls so that, people will not be able to take it out. Now also in the audit manual, it says that, preferably to be fixed on a wall. And these keys to be kept by the cashier as well as the DDO so that it can be opened only with the presence of the 2 officials. So these two duplicate keys have to be there. 2 duplicate keys have to be there. So one of the locks key will be with the cashier and the other locks key will be with the DDO. Only when these 2 officials are there, the cash chest can be opened. Next important point to be noted is 1 key to be kept with the bank on proper acknowledgement. So it is very incumbent that one of the keys, so duplicate keys will be there. So duplicate keys means, 2 keys will be there. 2 locks, 2 keys will be there. Its duplicate key will be kept with a bank. And you also have to take an acknowledgement from the bank. And it says that, every year, by beginning of the financial year, both DDO and cashier has to go to the bank and also check whether the same keys are there or not, and some sort of a certification is also to be made. I'm not clear about that. Some sort of certification is also to be made with the bank manager. Regarding this, cashier's job, fidelity bond. Fidelity bond by the cashier as guaranteed. This is also one of the conditions. They're also getting cash handling allowance, and this much amount will be with them. Especially big institutes, 1 lakh, 2 lakhs, or 3 lakhs interest will be available with the cashier. To guarantee that, to safeguard this much amount, some sort of fidelity bond is to be given by the cashier as guarantee. Change of DDO when tour or on leave. So normal, the regular incumbent goes on leave or tour, then there has to be a takeover, handover has to be there. Because you are handing over to another officer who will be discharging the duties of the DDO. The cash, the taking over the new incumbent DDO will have to physically verify the cash, and he has to certify that this much amount has been taken over. And the other, the first action is to be given to be done by the present incumbent. He has to hand over this much cash, and the new incumbent has to take over the cash, and the same has to be entered into subsidiary cash book with the dated signature. When the regular incumbent comes back after the tour or leave, then again the same formalities have to be taken. Again, handover by the takeover by the regular incumbent. Main cash book. Now we come to the main cash book. I've already told that accounts officer of the institute is the custodian of the main cash book. His main duty is proper maintenance of the cash book. That is actually the primary duty of the cash book. All the receipts the institute gets by way of check, DD, or even online transfers to the bank account. This has to be well accounted in the cash book on the receipt side. This includes the paying slip received from the DDO. All receipts in the form of checks, DDs, PIS from the DDO are to be deposited with the bank only after noting in the cash book. That's okay. So what I meant is, whatever receipts, what I was trying to mention is that before we give these checks or demand drafts to the bank, it has to be entered in the cash book, and that needs to be attested by the accounts officer. After that only, it will be given to the bank for collection or realization of the amount. Likewise, all payments, withdrawal from the bank, are to be made only after noting in the cash book with the proper attestation by the accounts officer. All payments, mainly by checks or issue of some notes, 2 signatories will be there, and first signature will be accounts officer, and the second will be from one of the officers of administration. And both the officers will have to sign the counterfoils of checks. This will guard against missing or misuse of checks by anybody. So whenever we issue a check, and both the officers will have to sign the counterfoils in the checkbook. Closure of cash book. Unlike the subsidiary cash book, the institute's main cash will be closed on a monthly basis. It won't be closed daily. The balance at the end of the month shall be struck, and the grand total on each side of the cash book agreed. For the receipt side, for the pay and the payment side, the left side and the right side have to be tallied. It will be tallied with the closing balance. That is the way the main cash book is to be closed. Closing balance in the main cash book and the bank. Now we discuss the difference in the closing balance which we have written in the cash book and also available with the bank. Normal course, the closing balance has to be same. But whenever there are many transactions or whenever there is many transactions, the closing balance need not be tallied or same. So in such situations, no, we have to find out why it is not tallying. So that is why in our parlor, accounts parlor, we say bank reconciliation. Now we move on to the bank reconciliation. It is very simple, need to be slightly attentive, and is very important also. Very likely, I repeat, very likely, one question will be there on the bank reconciliation. Bank reconciliation statement. Situations which affect the balances noted in cash book and with the bank. The balances in the cash book and the bank in an ideal situation has to be same. When we deposit 1,000 rupees, we note it in the cash book. Naturally, we are having a balance of 1,000 rupees. Naturally, the bank will also give you 1,000 rupees. In your cash book, 1,000 rupees. In the bank also, 1,000 rupees. You are having it. And after, then you withdraw some 500 rupees, 600 rupees. Your closing balance in the cash book comes down to 400 rupees. Bank also, the closing balance has to come to 400 rupees. It's a very good situation. But not all the time, this closing balance will be same. Now let us discuss, what are the situations in which, the transactions in the cash book and also the bank are affected. Means, certain transactions are occurred in the cash book, while, some transactions are not occurring. Some other transactions are occurring in the cash book. That is the main reason for this difference in the balance in the closing balance. So these are the situations. Checks issued but not presented for payment. When the checks are issued by the institute, definitely the closing balance will come down in your cash book. But those checks are not presented to the bank for payment. Naturally, the closing balance will not have any effect. So this much amount has not been debited from the bank account. So this is one of the situations. There will be difference in the closing balance. This can happen, especially during the month end. On 31st March, or for that matter, 30th April, if you issue some checks to some firms, in your cash book, the expenditure has come. Naturally, when expenditure has come, the closing balance definitely comes down. But the firms or the persons present those checks to the bank only after a week. So there, the closing balance come down only after 1 week. This is one of the situations. There could be mismatch between your closing balance and also the balance available in the bank. Balance as per the bank, balance as per the cash book reduces immediately upon issue, but balance as per bank passbook remains unaffected unless it is presented for payment. Another situation is credit given by bank, but not accounted in cash book. These differences may arise when a transaction is recorded by the bank in the passbook, but not recorded in the cash. Suppose the bank gives you interest. Such intimations, no, the crediting of the intimation to the institute or to the accounts officer will take time. Suppose it is a month end. On 31st, you are giving some 1,000 rupees as interest. So that amount will be credited to the bank account, but in the cash book, it will not be credited. So there is a difference. In one place, you are getting some cash. In another place, you are not getting the cash. This is another situation of in the imbalance, in the closing balance. Differences may arise when a transaction is recorded by the bank. Interest is given by the bank. It got credited, but not recorded in our cash book. That credit is not taken into our cash book. Following types of transactions are not known to the account holder for some time. For some time, no, these transactions will not be known to the account holder. Interest allowed credited by the bank. It will not be immediately known to the accounts officer until unless he or she closely watches it. Direct deposit made by the customer. For a training, somebody deposits some amount, 1 lakh rupee, or from DBT or DST, there is a remittance of fund for a project. So that is directly credited. Immediately the accounts officer will not know it. Then bills payable made by bank on our behalf, especially in the case of letters of credit and all that. We will not make the payment, but then on our behalf, they will debit to our account and make payment to the other parties. These are the situations, no? An accounts officer will not be getting the information on what is happening to the bank account immediately. The moment he gets the intimation, no, it will immediately be noted in the cash book also. That time only the closing balance will be same or tallied. Debits made by bank but not taken in cash book. So these are the situations, the debits made by bank. And it will take some time, before the same is taken into the institute's main cash book. Bank charges, interest charge debited by bank. There could be some situation, some commissions are charged by the bank. You get demand draft. The bank will debit you. And the bank will also debit some interest also. Maybe some overpayment, some very rare cases. Now there could be some negative balance also. It has happened in one of the institutes where I worked. This has happened actually. There was no money. I think there was a serious situation like some salary part, some amount. We were running short of it, and the bank helped. Naturally, they charged also. Direct payment made by bank, standing instruction of account holder. We don't do any standing instruction. I don't think, to my knowledge, nothing is there. But one of the classic examples is that payment to the payment in respect of the LCs. This is another situation. The bank balance, the balances between the cash book and the bank differ. Checks deposited but not collected. We have given some checks to the bank for realization. Early times, these checks will be sent to some other stations actually. It will take some 3-4 days, 3, 4 or 5 days before it is realized, collected and then credited. Especially during the month end. If it is in the middle of the month, yes, within a week or 10 days, you will have the realization. But when it is in the fag end of the month, this situation can happen. In your cash book, this much amount is closing balance, this much amount is already taken care. So naturally your closing balance is increased, but in the cash book, till realization of that much cash will not be credited to your bank account. That is why there is difference. When we deposit a check, balance as per cash book increases immediately, but balance as per bank passbook remains the same until it is cleared, cleared and actually collected, credited by the bank. So the difference or the this much, it is because of this much time the bank takes. There is a difference in the closing balance. Yeah, how to prepare the BRS? We accounts people say BRS means in a bank reconciliation statement. For preparing the BRS, bank reconciliation statement, we need the bank's statement. We need the closing balance as per the cash book. Sometimes we need the previous month's bank reconciliation statement also, because of some of the items will still be pending in the previous month's statement. So these are the three documents we need at the time of preparing the bank reconciliation statement. It is simple. You're reconciling the closing balances. Ideal situation should have been your closing balance as per the cash book and the bank balance should be same. It should have been ideal that way. Every accounts officer now do desire that. Considering the difficulties and all sorts of problems, at the time of or while preparing the bank reconciliation, we do long for an ideal situation like this that it has to be same, but it will not. In such situation, we have to identify what are the problems, what are the issues, what are the situations, make a different closing balances at these two places, cash book and also the bank. What is to be done? We have a closing balance as per the cash book. With that balance, we have to add the checks issued but not cashed. So when we issue the check, our closing balance as per the cash book came down, but it is not presented to the bank yet. Naturally, that much amount will be available in the in the bank. So now, the total of the uncashed checks need to be added. So that you will reach the same closing balance of the bank. Till such a time that checks are encashed at the bank, the inflated figure will still be there in the bank. 4 transactions are there actually. 2 transactions are to be added and 2 are to be deducted. Since checks issued in our cash book, expenditure has come, closing balance has come down. But since it is not encashed, since it is not debited to our bank account, this much amount has to be added to the closing balance, to our closing balance, because that much amount will still be available with our bank. Second situation is credit given by bank, but not accounted in the cash book. Credit given by bank. In our cash balance, the bank has given you some credits. It is there already in the bank, but in our cash book, it is not there. So whatever amount of credits given by the bank has to be added along with our closing balance. Then only it will be tallying with the closing balance of the bank. Likewise, there are 2 situations in which we have to deduct also. We have to deduct from our closing balance. What are they? They are the debits made by bank but not taken into our cash book. Situations are some commissions charged by the bank, or some GST is charged by the bank. But again, as I've already told, some debits, related to letters of credit. All these debits will be known to the accounts officer only after some time, not immediately. So that much difference. So the debit made by the bank is not accounted by us. So from our closing balance or from the bank account, that much is gone already. So from our closing balance, whatever debits made by the bank has to be deducted. Again, another situation or the other situation as far as issues are to be deducted from our closing balance is credit in cash book, but not given by bank. We have taken into our cash book some credits, some demand drafts. We have already taken into our cash book. Okay, we have in our closing balance that's already there. But in the closing balance, in the bank balance, it is not there. So from our cash balance, this much amount needs to be deducted. Then only it will be tallied or reconciled with the bank balance. We need to practically do it, but it is easy. This formula you can by heart it. Somewhat it is logically also you can understand it. It is easy. Bank reconciliation statement is to be part of the cash book. It is the primary duty of the accounts officer. Nobody else does it. Since he is the custodian, proper closing of the cash book along with the bank reconciliation is very important, and it has to be written along with the monthly closing with the proper attestation by the accounts officer. It needs to be properly attested also. There is some timeline within which we have to send these bank reconciliation statements to the council. This is to be done immediately after the closing of the cash book. ICA doesn't encourage any item pending for more than 3 months. It is very important that Joint Secretary of Finance, writes very frequently regarding this important aspect. Many institutes are having issues which are pending for more than 3 months. Take the case of a check. A check is given to a firm or a person. He or she doesn't present it to the bank. It remains in our bank account. Of course, the validity of the check is 3 months. It automatically gets invalid. But still, for at least for 3 months or 4 months, suppose we do take some action as far as this invalid check, that will still remain in our bank reconciliation statement. And how do we take that, how do we address that issue? A check which has come back from the party, maybe because of so many issues, maybe the institute might have recalled it, maybe a wrong payment, or this, the validity of check might have got over. Then you have to issue an entirely different check, or the check is missing. After 3 months, and the bank also certifies that it is not presented to the bank for payment. It is missing. In that case, what an accounts officer does it, he simply reverses, what he did in the cash book. When he wrote a positive figure in the payment side, when the check comes back, he writes with a red ink the negative figure over there. So when that, when the check comes back, expenditure comes down, checks comes down from the bank reconciliation also. This check has to be removed from the bank reconciliation statement. Another issue, bank also give you credit, and for some 3 months, 4 months, they are not giving. Many cases, people deposit their money, and we don't have the details. Many times the bank fellows also don't give us, or they themselves don't have these details actually. And we do face a lot of problems and we don't have the details. At least we ask the manager, the branch, the bank, and also the branch from where it got it is credited. Some cases, even those information is also not available. It is very difficult, especially getting the information after 5 months, 6 months, 1 year. It is very difficult. Now it is earlier times, vouchers will be there. After 1 year or 2 years, if you go to the bank, taking out that vouchers will be very difficult. Now it is, computerized, and bank fellows are also very helpless to give some information because it is not available. And some another case is that suppose we present a demand draft, immediately it should be given, or even outstation check, and it is very likely that checks or demand draft can get mixed up or missed in the bank. Naturally, they cannot give you the credit, no. So the things will be delayed like that also, maybe 3-4 months, and so finally, it will be missing forever also. It will be lost also. In such cases also, the accounts officer will have to do the same thing. Reversal of entry he made. First time he made, it was a case of check. He has to make a reversal entry, the payment side. When a demand draft or a check is missing or lost, irrecoverably lost, then he has to do the same reversal at the receipt side. Anyway, in fine, what I'm telling is, kindly see that whenever you are doing this bank reconciliation statement, it is not just the case of reconciling the figures, reconciling the bank balance and also the cash balance in your cash book, but you have to settle the unsettled issues of debits, credits made by the bank, and also checks issued by us, and also some of the checks, demand drafts, we have deposited with the bank. So it is incumbent on also to see that all these transactions are settled immediately. Subsidiary cash books of regional center stations. It is also very important. I don't know many institutes do it, but in one of the institutes where I worked, I went for a internal audit for one of the regional stations. And that station was housed in one of the institute also. A portion of the building is given to that institute, regional station of the other institute. And this regional station has got some quarters. And the main institute, some of the officers were residing in the quarters. These quarters is of the regional stations. The main institute recovers the license fee from their salary and then credits to the bank account of the regional station. It is about 8 lakhs. Nobody knows the details of it. It can be something else also. It need not be the license fee alone.
Sir, slide nahi.
Sir,
Slide move nahi ho rahi.
pardon?
Slide nahi dikh rahi sir.
Past or what?
Next वाली जो अभी आप बोल रहे हो वो slide नहीं दिख रही.
Anyway, I'll just this, and I'm just talking about the bank reconciliation statement. Now we are unable to get the information details of the bank credits. We got all these years. That is one thing. The second issue is from who all we have collected the license fee. That is also, until unless this information is available with the other institute, we will not be able to. I don't think that regional station is maintaining a bank reconciliation. Had they been doing it, then this issue would not have come. Now an outside agency or some other internal audit from the internal audit or local audit comes from the AG's office. We will not have any answer. What this. One second. 1 second. Anil. Achha, again same problem. Okay. Now which slide? Okay. Oh, same issue. Okay. 1 second. Okay. Achha, there is some technical problem. One of my colleagues just called. I'll manage that. 1 second. Anyway, I think, Niyasam will be distributing this slide. Anyway, there is some technical issue. I have called one of my colleagues. She'll be coming now. Anyway, I'll just, continue. You will be getting the slide right now. No issue. At least, I can be heard, no? Can you hear me? Can you hear me?
Also, sir.
Yes,
It
sir.
is moving, sir.
Yes,
Right. Then, why do we need a bank reconciliation statement? I have already, partially told. Right. A bank reconciliation statement ensures that all payments made by the company are processed and all deposits are correctly made on time. That is also very important. Some of the payments we make, it has to be immediately deposited to them also. I'm sorry, let me read once again. I just clicked. Bank reconciliation statement ensures that all payments made by the company are processed and all deposits are correctly made. Yeah, this ensures that all the payments are made to the firms or stakeholders and all our deposits, whatever instruments we deposited with the bank, like check or demand drafts, are correctly made, deposited to our account on time.
And now it is moving.
Acha, anyway, okay, thank you. Credits, I know these are the credits, bank. These are the credits, which affects the, which finally, culminates in the imbalance of cash imbalance in the cash balance in the cash book and also the bank. The checks, the demand deposits, then as far as we are concerned, and the bank interest and other credits directly made by the parties to the bank. So when checks and deposits, we deposit but not credited by the bank, then bank interest and other credits from the bank, when it is not taken care by us, then also there will be difference the bank balance between the cash book and also the bank balance. As far as debits are concerned, checks issued by the bank and it is not presented, then again the next situation is bank commission debits during LC operation. These are the four situations which make the cash balance in the cash book and also the bank differ. Advantages of bank reconciliation. Errors made while entering the transaction by the institute. We make duplicate entries as far as a payment is concerned, or for that matter, a receipt is concerned. Either there will be a less balance or an inflated figure of balance when we make duplicate payment or receipts. And this can be found out when you do the bank reconciliation. When you do the duplicate entries, your closing balance and also the bank balance, when you do the bank reconciliation, it will not tally. So errors made while entering the transaction by the institute, that can be found out. Errors made while entering the transaction by the bank. Bank can also do some error. It can debit and it can make some debit twice. At the same time, very rare cases, it can also make duplicate credits also. We have experienced it. Actually, whenever LC some collateral securities kept apart, the bank gives you interest. There were cases now bank gave you 2 times such duplications from the bank side also we can identify. And we will intimate also. Why we intimate? Next point helps not to take into account amount not due to the council. We are, as an accounts officer, we are not supposed to take into account any amount which is not due to the council. A duplicate credit need not be taken into account by us. This has to be intimated to the bank. And this is possible only when you do the bank reconciliation. Like that, if a duplicate debit is made by a bank, 2 times, if they're debited to us, we can also tell the bank and they can correct it. They can reverse the debit they made. Advantages of bank reconciliation. So I'm just winding up. This is just a repetition of what I already told. As far as bank reconciliation is concerned, the error committed by the account holder in the recording of transactions. This can be found out. Check issued but not recorded in the cash book. Definitely, it will end up in a difference of cash balance between the cash book and also the bank balance. Checks deposited into the bank but omitted to record in the cash book. Sometimes checks will be deposited to the bank, but it is very likely that we will miss it. We may think that we will do it later. Sometimes we may miss it also for a variety. But when the bank reconciliation comes, this check will already be got credited in the bank, but in our cash book it will not be there. We simply missed. That time we can correct it. We can again note about this check in our cash book. These are the plus points of having a bank reconciliation. Error in totaling or balancing of the bank column of the cash book. So if there is any error in the totaling and balance of the bank book, bank column of the cash book, this error can be found out, rectified by doing the bank reconciliation statement. The error committed by the bank in the recording of the transactions, that can also be found out and issue addressed. Wrong debit or credit in the account holder's account. So any wrong debit comes or any wrong credit comes, it can be addressed. Okay, because any debit we have our record, any credit we have our record. Anything which comes out of this record, unless it is due to us, it will be cleared by the bank later. It can be found out and we can tell the bank. We can address how it came and where it came. Recording bank charges and interest more than once. Bank charges and also the interest can be credited or debited twice. This issue can be addressed when you promptly do the bank reconciliation statement. So separate a bank account for schemes. Government nowadays insists for separate bank account for different schemes. For one scheme, one account. But in one scheme, there will be so many projects. Why they do it? It is incumbent on the government to see that this money doesn't get mixed up with some other scheme or some other project's scheme. This money has to be utilized purely for this scheme. Monitoring of the fund flow is so easy so that unnecessary parking of fund could be avoided. Mostly the central sector scheme funds are received through the PFMS. And the government know where the fund is or how much fund is available with the agency. It need not unnecessarily park. Further pumping of funds, it is not needed. In one scheme, funds are available and it can be utilized by other projects also. But there are some issues also which I will discuss. The government's intention is that, under one scheme, if funds are available, it is to be easily used for that scheme and also for other projects under that scheme. and also to generate income from the available savings. Very rare cases, we will be required to open the bank accounts, especially interest-bearing savings bank account. There also one of the intentions of the government is that we have to generate another source of income, that is by way of interest. Generate interest from the available savings. It is not generate income, it is interest. Then again, for opening of the all this bank. One second. It is taken care. No problem. It is taken care. Thank you. And one important aspect is that, for opening a bank account with the commercial banks, we have to have a permission from the council. It's very important. Without the permission of the council, you cannot. And mostly council agrees to it. And the defects related to this is that, under one scheme, we now face in CMFRI, we have got, one of the flagship program from that directly being monitored by the Prime Minister's office actually. Under one scheme, some 3890, scheme code is 3890. That is actually Prime Minister's Matsya Sampada Yojana. We are already having some 6 schemes under that, 6 projects under that scheme. And we have got some amount also. Since this much amount is available under the scheme, the department of one of the departments is not, releasing funds to us, and it badly affects our programs. Since elections are also coming, we are also under tension, we are still unable to start the program without the funds. The problem is, under the scheme, different projects are there, different PIs are there. For taking, it is as good as taking their money for utilization of this project. All the PIs need not agree. Even if they agree, it will definitely badly going to affect the research R&D programs also. So this is one of the drawbacks for that. At least, we have already written to the ministry that, at least for each project at a time, 25% money has to be made available so that the problem could be solved in a big way. Then, another important thing, as far as cash book is concerned, for in account section is that, treasury single account. This is a very good move by the government, and many of the autonomous bodies, almost 150 plus autonomous bodies have been brought into the ambit of this treasury single account. This account, the intention of the government is to minimize cost of government borrowings. Early times, government, borrows heavy amount from the Reserve Bank of India and then just, gives to the autonomous bodies. You can understand, how big, ICR is, and, almost all the autonomous bodies are also like that. And, how much amount of, money is required. And, ICR was, releasing as on a quarterly basis. So crores of rupees was being, taken from the RBI and given to us. Now that situation is not there. The physical cash transaction is not there. Instead, we were asked to open an account in the RBI. In the RBI, physical transactions, cash transactions are not there. Only the assignment limit is there, actually. We have been given a limit. We have been assigned some limit. Up to that limit, we can go on spending it. But unlike earlier times, physical cash transaction is not there. To enhance efficiency in fund flows in autonomous bodies, government need not pump in crores of rupees. That's the beauty of IT related developments. Then account has to be opened with the RBI. We have already, and in fact, many of the institutes might have already got opened 2 accounts at least. For the different schemes also, we have already applied. ICR headquarters is already taking care for opening the remaining accounts. Then online payments to firms, individuals. The plus point of this treasury single account, it is actually the online payment to the firms. In between, nobody else comes in between. Earlier times, in the dispatch of checks, in the dispatch of demand drafts, so many manipulations can happen. Now that is not there. So checks will not go, DD will not go, and DD can be delayed also. So in such a situations, manipulations occur. Now it is almost not directly, that benefit goes directly to the individuals or firms. Whatever service we get, whatever goods we purchase, and its payment is being made to the firms directly. So this is the situation. Yeah, thank you very much. My talk is over. Now, any issues we will discuss? Niyasam Baramadi, my talk is over.
Sir, BRS का एक बार पूछ सकता हूँ।
Hello. Hello.
एक मिनट सर, एक मिनट। One minute, sir.
Hello. Yeah. Some discussion.
Any question?
Pardon?
Participate all. Any question?
Difference between bank reconciliation statement and reconciliation of account as given in budget and audit and account exam. Hello.
Yeah. Can you repeat, sir? Can you repeat?
Yes, sir. Sir, difference between bank reconciliation statement and reconciliation of accounts.
No, both are same. Today we discussed only bank reconciliation statement. Reconciliation of the figures, closing balance mentioned in your cash book, and also what is available with the bank. I didn't use the word account. In fact, I was mainly discussing the bank reconciliation statement only, reconciliation of the closing balances.
We are just telling with the bank statement and cash book.
Yes. Right.
Okay, sir. Thank you, sir.
Okay, right.
Sir, is there any practical question?
It will, today it is not there, but kindly keep in mind, it's a very important subject. You will definitely get one question. One of the questions will definitely from, just like pension, one of the questions will definitely be from the bank reconciliation statement. It will be there. It is easy, but some 2, 3, or 4 cases, you can do it yourself. It is a very simple issue. You can do it. You can practice, and you'll definitely be able to do it. I don't think it is a big issue.
Okay, thank you.
Right.
Sir, one question is there.
Huh.
Sir, if we made a payment to any firm or any person and it is lying pending, means check received, check issued, but it is not debited. So how long it will kept in the bank?
No, that check is with you or with the firm?
It is means issued to bank. The
Check
firm
is issued
not,
to bank. Okay. Anyway, validity of the check gets over within 3 months. It is only 3 months.
Okay.
So why they are not crediting it, or why they are not processing the check?
They have not processed. Suppose just it is a question. Not
they have to, because they have to. Naturally, when a party gives a check to the bank, they cannot keep it for.
Somehow they not credited, debited that day. In that case.
Okay, if it is a serious issue, you can take it with the banking ombudsman. Anyway, the check's validity gets over within a period of 3 months.
3 months.
It is of no use. That check is of no use. But then why should the bank keep it like that? They cannot. They should not. You have to take it seriously.
So where that amount show?
Pardon?
Where that amount should be shown?
Yeah. That amount will still be in your cash book, and because it is an expenditure. Okay. Till such a time the period gets over, it will remain in the cash book. That's what I said. It will remain some 3 months, 4 months, or 5 months, or 6 months. Later on, you will also see that for the past 6 months, your check is not clear. Then you will ask the bank why it is not clear. Then they may tell that it is misplaced. Then they will also give you a confirmation that it is irrecoverably lost. Okay. Then you can issue a fresh check, no problem.
From our side, we have to issue a new check.
Yeah, you have to. Then only bank will be able to make the payment. But then, please see that, that check is not issued. I mean, no, it will not be, cleared because, in that case, that would have come in there. That would have got that much amount would have got, debited to your account. That means, it is not encashed, right? You can issue a fresh check, no problem.
Okay, sir.
Good evening, sir.
Right.
If we get any amount which is not known, how to deal with that, sir?
Yeah, that is credited by the bank.
Not, sir. Someone credited, not bank. Someone credited to our account, but the details are not known to we are trying every, but the details are not known.
Yeah, that occurs actually. We also face some issues. In fact, in one of the institutes I worked, it was a 10 lakh rupee credit. We, discussed many times. We went to Delhi, DBT, DST, such agencies. Okay, but none could give us that information. And the bank people also, they were not able to give it. But bank also has some facility. They can also give some ledger folio or something like. There, you will get more information. But there also, they could not tell us who credited it. At least if we get that bank and also branch, we can even call that bank or branch. But if it is an online, I don't know. But situations like this are there. Banks are also helpless. We can do nothing. Otherwise, in such situations, of course, I have already told that we cannot take into credit an amount which is not due to the council. But since this issue is there, some institutes what they do, they will transfer to their miscellaneous receipts. But then it is not correct doing like that. But you can also, in such cases, we can also seek the advice of Joint Secretary Finance. For these many years, this amount has come. Bank is unable to give you the details. We have also not getting intimation from the individual. Kindly tell us, kindly advise us. Definitely, he will give you a good advice. Now, what is to be done? Anyway, you cannot make any payment to anybody else. Bank cannot also withdraw it. So you have to somehow do it with the advice of Joint Secretary Finance or from Council. Any other question?
Any questions? Okay, sir.
Yeah.
Thank you, sir. Thank you very much for today's wonderful session. Sir, definitely all the trainees will be getting benefited for their examination from your today's wonderful session, sir. Sir, we all from NISM family and from all the trainees, we thank you all very much, sir.
Thank you very much, NISM, especially Dr. Das sir, and all the very best, all the participants once again. Very kind of you. Thank you very much.
Okay, sir. Thank you very much.
Take care.
Thank you all. We will close today's session.